Okay, so let's kind of move from here and understand what trading is all about and how to kind of really approach trading. What are the means of really trading, right? There are many ways to trade in stock market, and some of you might already have some idea about that. So, but let me kind of list that down, and I'm going to go little bit more detail on all of those things with specifics in the subsequent sections, but this is just an introduction of ways and means of trading, so that you know that there are many ways of trading. There is no one single way of trading in stock market. The very common thing is called as scalping. Scalping is that way where with every move in the market, every single tick in the market, tick is nothing but if the change in price by one single unit for that particular script, like for example every 5 paisa move, right? So that is what is called as a tick. So now with every move, people do a kind of trading where they keep buying and selling and buying and selling and buying and selling. There is a huge amount of quantity of buying and selling where they do, and this happens at a very low time frame, in every second or 2 seconds or 5 seconds or 20 seconds and so on and so forth. So in scalping in a day they end up doing hundreds to thousands of trades, and that is called as scalping. So in this scalping, you got to be completely glued to the screen, and you got to be in front of the screen almost all through the day to kind of generate your income through the buys and sells and buy. At the end of the net, what they make is a profit. So that is the first kind of way of trading. Then comes intraday. Now intraday is you start at the beginning of the market opens, say the NSE opens at 9:15 in India and closes at 3:30 p.m. in the afternoon, right? So now you start your trade in the morning based on whatever system and strategy you are deploying, and then before the market closes, you kind of square off all your positions, which means you either buy in the morning, and at the end of the day, before the market closes, you sell, and as a result of that, either you make a profit or a loss. Or you start with selling in the morning, and at the end of the day, you kind of sell. So here you trade in a time frame starting from 1 minute to 5 minutes, 3 minutes, 15 minutes, and even maybe some of them trade in half an hour, 1 hour, 75 minutes as well. So but you enter and everything is closed at the end of the day. So it happens within a day, and that's why it's called as intraday trading. And now the next is swing trades. Now what happens in swing trades? Swing trades is like market moves in a particular fashion. It goes up and comes down and goes up and comes down, right? Now from one when it goes up, it reaches some place, and then it is eventually going to come back here and then go back up here. So when market comes down, you buy there and then wait for it to go up to a certain level, and again you kind of keep repeating that, sell there, buy here and sell there. That's called as a swing of a market. Now when that happens, these trades typically last for more than a day, sometimes 2 days, 3 days, sometimes even up to a week. So swing trades are typically held for couple of days to even a week's period. So that is called as swing trades, and here typically the trading time frame is typically daily time frame. You don't trade with less than daily time frame. That is swing trades. And finally you have something called as positional trades. Positional trades means you slightly have a long-term view, beyond a day or a week. You look for what is a market going to do, or what is particular script going to do over next few weeks and to few months as well. So you form a view, and basis that view, you either buy or sell and hold that position for few weeks, maybe a couple of weeks, and maybe sometimes even few months as well, based on what is your view. That is called as positional trades. And finally we have something called as trend following. This is my favorite actually, and I'm a hardcore trend trader. So in trend trading, the first 4 things, scalping, intraday, swing trades, and positional, in the first 4 kinds of trades, you have to have a view of the market, which means which way the market is going. You have to understand that, rather you have to have a means to predict that, to ascertain that, and basis that you have to enter the market. But in trend following, you simply don't do that. What you do is you follow the market. You're always behind the market. What does it mean? It means the market is going up, you also take a position on that side. If the market is coming down, you also take a position on that side. So here you build systems and rules and deploy that so that you don't have to think or you don't have to predict the market, but simply be behind the market. These are the four ways in which people can kind of really trade in stock market, right? So now for each of these things, we're going to go very deep and understand each of those things, and you'll also get few trading methodologies for each of those systems, each of these ways of trading, which you can try it out in the market and understand, what really suits you. Now let us kind of move forward from here. So far people, before I kind of move on, if you're kind of understanding and if you've got these 5 kinds of trade, type in the comment, understanding the types of trading. Thank you so much. And of course, we're gonna look at your comments and kind of respond back as well based on how you're kind of commenting and how much time we kind of have. So thank you for that. So now let's kind of move from here and kind of understand what are the various. There are many instruments which you can trade in stock market. Especially in trading, right? Equity shares is a very common thing. Then comes commodities, then comes currency, and then comes derivatives. In derivatives, we have 2 kinds, which is futures and options. Each of these things we're going to go a little bit deeper in the next section, where you will learn what are each of these instruments, how does these instruments impact, and what should you be looking at, and how to really approach them. All of that you will learn step by step in the subsequent sections. But now what is important is, in this section you have to learn, you have to understand that there are many ways to trade. We kind of understood that there are 5 different ways of trading in the market, plus there are many instruments. These are the common instruments which most of them employ their money in stock trading. So this is very important to kind of understand. So far I guess you kind of understood what are the kinds of trade and what are the instruments. If you've kind of got so far, type in the comment getting instruments to trade. And in the next video, I'm going to come and discuss about how to really approach the market. Is trading best or is investing best? So we'll kind of discuss that. Until then, enjoy your learning. See you in the next video.